Good afternoon. Welcome to join us at the Asian Financial Forum webinar. My name is James Chang. I'm the PwC China Financial Service Leader. PwC is proud to be the AFF Knowledge Partner. Today's topic about Web 3.0. When we talk about this, I'm sure a lot of things come to your mind, whether it's blockchain, decentralizations, cryptos and NFTs, etc. And we also tend to compare, Web 1 to Web 2 and Web 3. When we're on Web 1, that's where it's pretty much one-way, traffic information, download or read only. Web 2, which is the kind that most of us are currently living in, it's a two-way interaction, but it's still one-to-many, right? Because a lot of centralized platform companies. Web 3 supposedly more many-to-many, and I call it 3 dimensions. And there's also concepts of from PVG to PGC to UGC. Provider generated contents to user generated contents, where all of you can create the contents. But obviously, I know nowadays we also have this thing called AIGC, with the AI also being players in this universe. It's become even more complicated. So, and also we all know in Hong Kong, the government has been really pushing for the Web 3, and Hong Kong government in the future is going to spend millions of dollars boosting industry with plans for virtual asset task force, and has also ramped up efforts to boost the digital economy, including the new virtual asset regulations and the support for artificial intelligence. And I believe in June 2023, Hong Kong already began taking applications to license virtual asset service provider, and is also starting potential stablecoin regulations. With that, it's my pleasure to host such a distinguished panel with a group of experts in the financial service sector to discuss how to revolutionize the business model and engage the digital community with the Web 3. The experts are with us today are, first of all, to my left, Miss Jennifer Tan, Executive Vice President of Strategy Development and Government Affairs, Greater Bay Area of Ant Group. Jennifer is also recently appointed as the program head of 10 times 1,000 Tech for Inclusion, which is a philanthropic initiatives launched jointly by the International Finance Corporation, a member of the World Bank Group and the Ant Group. To her left, Miss Emmanuelle Pecenicic. She's the head of digital propositions and partnership Asia Pacific, exclude Japan, for Fidelity International. Emma also leads the build out of Fidelity's digital product solutions and the digital wealth management strategy, and has been enabling an improved customer experience in Asia. Last but not least, Mr. Ben El-Baz. Ben is the head of an ecosystem from Hashkey Group, who was one of the founding employees of this regulated digital asset company. Some of you may know Hashkey is one of the 2 companies has received the Type 1 and the Type 7 license. Ben has been leading the group's strategic partnership for the exchange, tokenizations, and blockchain application business. So I'm really looking forward to this very distinguished and diversified the panel here. So with that, maybe let me go to first part of the question. By the way, you guys are encouraged to submit your questions. Towards the end, we have about 10 to 15 minutes for the audience to respond to your questions. So first part, I want to talk about the current environment of the Web3 and how each of you, which representing different segment of the financial industry, what you are doing. As I mentioned before, Web3 is, the concept of digital ownership, decentralizations. But in your mind, what really defines the Web3 and it differentiates from the Web2, and how does that impact and reshape the financial sector you are in? So for example, so I guess Jennifer, for you, start first. You guys are obviously one of the best top fintech companies, and you guys are already really engaging the customer through the current digital means. And what would you say it will make the Web3 different from what you're already doing, and how would that further improve the user experience in comparison to your current model? And if you can share some, success stories.
Mm-hmm. Yeah, first, thank you, AFF, inviting me to join this forum, and also, thank you for James' introduction. I think, Web3, as everyone knows, that it is also often referred to as the decentralized web, which is a transformative evolution of the internet that introduced decentralized technologies. And with these decentralized technologies such as blockchain, smart contracts, and decentralized applications, we consider that it can turn impossibilities to possibilities.
Okay.
And I would like to share some examples how Web3 can benefit the fintech and also the digital wallet business as well. Okay. First, we always talk about this DeFi, integration, yep. Decentralized finance. Okay, yep. Because Web3 allows the seamless integration of DeFi services into digital wallets. So, for DeFi platforms, they build on a blockchain technology. They actually can provide users with opportunities for, say, like lending, yeah. Borrowing, stacking, or yield farming, and all this. Of course, like currently, I also know currently, we don't have those licenses to run that in Hong Kong. The digital wallet, we don't have that. Okay, yeah. We need to apply license. But you just consider that, okay, if we can collaborate, yes, with partners, or then that means we actually can provide a much broader service, financial services, okay, to our users as compared to today. Okay. Okay. And so you mean, yeah, bigger ecosystem, yeah, bigger you can build with the, yes, the decentralized, yeah, technology. Exactly. And because and second thing is this tokenization of assets. Yeah. Web3 also allows for tokenization of various assets. Say from a real estate to art or to collectibles. Okay, so I am also imagine, okay, we can also work with partners, okay, or with some other platform service providers, which they can enable a user to store, to trade, their tokenized assets in our digital wallets. And it is also, compared to traditional financial assets, that means we also expand the current offering. And so in terms of the product, yeah, and the services, exactly, right? So it used to be traded in the physical world. It's harder to store, transport, and now with the tokenization, make it much easier, yeah, efficient. Okay. Yeah, that means the functionality of wallet is, okay, also expanded. Okay. Okay. And thirdly is, everyone talk about smart contract. Okay. Yeah. Smart contract, of course, it also it has automation. Say you just imagine, we can help to streamline, automate a lot of service. For example, like loan. Okay, you can start from loan origination, and then you can have the credit assessment. You can also have this interest payment, and also partial repayment. All these things, if you just with this smart contract, yep, it will make life easier, right? and you mean less default, less enforcement, less dispute. Yeah, less dispute, and okay, also it reduce operating costs. Yeah, reduce operating costs and, yeah, enhance efficiency. Yeah. And another thing I would like to quote is like this cross-border payments. We, yeah, all know that, yeah, because with the blockchain's nature, it can also help to to just avoid the intermediaries. We can reduce, this transaction costs and make it faster, cheaper. And talking about, I'm very quickly also talking about some key success stories. Okay. Some may not be just in Hong Kong. I'm just thinking about, for example, we're talking about this smart contract or DeFi. You know about MyBank in China.
Yeah.
Okay. MyBank actually is one of the first digital banking service in China, also under Ant Group. And by working as they embed just like a mini program in Alipay, China's wallet. So at the moment, up to over 40 million of those small merchants already using that to borrow, to just borrow the money. We're talking about this 310 model. That means within 3 minutes they fill in the application.
Yeah.
Then talking about like 1 second, they already know about whether they can get the loan or not.
Yeah.
And zero means it is zero, human intervention.
Yeah.
So this is already proved.
Okay.
And if you talk about cross-border payment, back in 2018, we also ride on Ant Group's blockchain, the Chain technology. We already can offer, from Hong Kong to Philippines, where you talk about this is wallet-to-wallet cross-border remittance. And we also offer quite a lot of, provide this service to Hong Kong's, the Filipino markets.
Got it.
And,
okay.
Yeah.
Good. Great. Thank you, Jennifer. So you definitely share a lot of the good stories about how this Web3 technology, even for fintech companies like Ant, can further enhance the customer experience, broaden your financial service or wallet offering, and improve the efficiency from operation perspective, especially serving this small customers cross-border wise. That's great. Okay, so maybe let's now go to Emma from traditional. I still see Fidelity as a traditional investment asset management company. What do you see how Web3 is more relevant for the individual wealth management client as well as the corporate client? And what are you guys doing to transform or drive the client from Web2 into a Web3 world?
Yes, thank you, James. So at Fidelity, we see the impact of Web3 at 3 levels. First, how we can give exposure to Web3 as an asset class, so basically digital assets into portfolios. The second is how we can use Web3 to distribute more products, benefit from the fractionalization, the cross-border that Jennifer just mentioned, to basically bring more product to a new audience, new channels. And then finally, Web3 is an opportunity to bring the younger investor into the beginning of their investment journey. And this we have started to experiment, basically, educating young investors into the Web3 metaverse this year. So on the first one, we are super lucky. You see us as a traditional investor, but we are not that traditional. I think we were one of the first one, back in the US 10 years ago to mine Bitcoin. Because we wanted to deeply understand this technology, and as we started to mine Bitcoin, then we help through Fidelity Charitable, basically to donate those Bitcoin and transfer the Bitcoin to US dollar, and then institutional clients were asking us how we can store those Bitcoin, and this is why in 2018 Fidelity Digital Assets started to launch and offer institutional grade custody solution for digital assets. And from there, the investment journey began, basically, where we started back in 2021 to launch our first Bitcoin ETF in Canada, and last year, early 2022, at Fidelity International, we launched our Bitcoin ETP that we proudly started to market last year in Asia. So this is, the first, providing exposure, to Bitcoin to institutional investor. And hopefully at some point, if regulatory, framework evolves, we hope to offer that as well to retail investor.
So new asset classes.
Exactly.
Exposure to that.
How you integrate
that. So you're
that.
beyond the traditional asset classes.
Exactly, exactly.
Good.
Then the second is really how you use, and we are talking a lot about real world asset tokenization.
Yeah.
But the structure of a fund can be tokenized as well. So you basically issue a new share of a fund on the blockchain. And this is called fund tokenization.
Okay.
This offers a lot of benefits by putting the asset manager, the custodian, the transfer agent, the distributor, the end investor, all on the same network. We are able to fasten settlement cycle,
okay,
to basically as well open new distribution channel to people like, to new distributor like Ant or even crypto platforms, for example. And as well, offer more transparency to clients. You can have the opportunity to, through the token, to embark a lot of information, new data, to fasten the reporting process, simplify some of our internal processes as well. So this is the second, fund tokenization. And then the third is really around how we embark, this young generation that, went into crypto investment, into understanding what it is to really invest for the long term. And not only to speculate on new asset class. And as you start saving and building your wealth, you need to understand, what it is to proper, wealth management and portfolio management. So last year we started thinking about that and really engaging into understanding more what we call the metazen, basically the persona that is going into metaverse, interact through Web3 community, how Fidelity can engage more with that audience. And that's why this year, in March, we launched our presence in Decentraland. We have an investor campus there where we actually had, we engaged with really a new Web3 audience. We started to market through Web3 channels as well, to social media through, again, Discord, etc. And from there, we learned so much. First, we learned that the interaction you have with the end client in the metaverse is really long, 20 minutes on average in our campus. So it's really long. When an investor go in an asset manager website today, they spend on average 1 to 2 minutes, and they look only at mostly at the fund fact sheet. When you engage 20 minutes with an end client, you can really educate them in a fun way. So we had, a game of life where you can play and understand what is the concept of saving, the power of small amounts. Then we had an exhibition with cats, basically, and through the cats, you teaching them, what it is about investing, basically. So you see, at those levels, we manage, even if I would say we are a traditional investor, investment management firm, but from there, trying to understand what Web3 means for our industry.
That's awesome. And I really learned here, I guess, you mentioned 3 levels of opportunity. First, to kind of getting exposure into the new asset class, right? The crypto assets. Secondly, is your fund operation now become you can tokenize it, and it really suddenly broaden the way how it issue, distribute, trade it going to the future. And thirdly, you really find a better way to engage a younger generation that which will be your future, real clients or more important clients through more fun ways of engaging, because these guys coming from the netizens, they're more used to this way of engaging rather than the traditional brochure.
Exactly.
Good. That's great. Okay, thank you. Okay, so maybe for Ben, you are already actually a virtual asset trading company. You heard about decentralized apps, DeFi, smart contract. These are all the fundamental elements of the Web3. And we saw that the 2 traditional financial sectors already fully engaged on that. Are you, as already a virtual VATP company, currently Hashkey, exploring any particular use cases to help streamline the operation, enhance the efficiency, and to engage the customer even better, compared to what these 2 already talk about? Can you share some, good perspective.
Sure.
Yeah.
So thanks, James. And I think it's always very interesting to hear perspectives from Emma and Jennifer and kind of what's happening in other areas of the space. I think maybe I'll share a little bit about kind of our perspective on Web3 and what we see the use cases are and kind of what Hashkey is doing to support this, right? So I think on the topic you raised earlier, right? What is Web3 and what's interesting about this space? I think one of the ways we try to think about it is, whether you call it decentralized web or, different names and things like that. I think one way we try to think about it is, what does Web3 unlock? Like, what are the new values that it unlocks for, either businesses or users or investors? And I think there's 3 angles that appeal to different types of audiences. I think the first angle that of value that Web3 unlocks is kind of what there's purists out there in the market who like to call it the internet of ownership, right? So it's this idea that, decentralized web and Web3, it allows users to hold on to things more than they have in the past, right? Whether that's your own data, whether it's your assets, whether it's your money, right? And so there's some audiences, some users out there who really like that power. But there's a lot of users and people, Web2 users, who don't necessarily think that much about that, right? Some people, they know that, okay, if I'm using Facebook or Instagram or, Bilibili or other types of applications, right? I know that my data is being aggregated, but I like the free services, right? So some audiences care about this internet of ownership, right? It's kind of the first unlock.
Got it. Yeah.
The second unlock of Web3, which I think relates a little bit to what Emma and Jennifer were talking about, is, Web3 unlocks, potentially can unlock lowering transaction costs of both finance and trade, right? So there's a lot of potential unlocks around financial services where we can talk, it was mentioned a little bit briefly.
Because all the intermediaries, right?
Yeah, exactly, right? A lot of the disintermediation and things like that. But also in trade, right? Over the years, there's been a lot of experimentation in how you use some of these technologies to make trade easier and how you make it faster, right? So for example, we don't have that much time in this session, right? But there's a lot of use cases that we've worked on through some of our partners where, how do you use blockchain and Web3 technologies in supply chain finance? Right? It's a combination of both finance and trade, but there's a lot of things you can do there. So there's parts of the market and some industry participants who are more interested in that second unlock, right? Lowering transaction costs of finance and trade. I think the third area, the third unlock is more around. No, it's okay. The third unlock is more around kind of, how do we enable new business models for users? So specifically, to dig into that a little bit more, the third unlock is this area of, for example, how do you change how do you create new business models that allow users and platforms to have a different type of engagement model? I'll talk a little bit about this in more depth. There's another really interesting area of so this whole area is kind of called Web3 consumer, right? So obviously a lot of people out there are familiar with, Web2, consumer internet, whether it's mobile internet, whether it's mobile commerce, social commerce. A lot of those business models exist out in the world. And but those business models contain a certain type of relationship between users and the platform, or fans and creators, or fans and brands, right?
So you still think there will be platforms in Web3? It's not gonna completely disappear.
So the word platform is a little bit of a heavy word. Right? A little bit of a heavy word.
Because a lot of advocates of the Web3 is about, Web2, there's too much power in the platform, right? So that's what we're trying to decentralize, give the power, ownership, controls into the users.
Exactly. So again, going back to my overall theme here, right? Some audience, some users, some consumers, they care about that, right? They say, I want to engage differently. I want to be engaging differently with my brand. I want to be engaging differently with the creator, with the
Yes.
artist. I want to be engaging differently with the platform,
Yeah.
right? So there's a lot of new business model possibilities that can be unlocked by new businesses that are trying to offer these types of engagement models. So back to Hashkey, right? Around like kind of how we're supporting this, right? So if you look at Hashkey's licensed regulated business as a whole, there is essentially three parts of the business.
Yeah.
The first is the venture investment arm.
Yeah.
So that's making investments in a lot of these early stage startups and businesses and these business models, whether it's whether it's tokenized business models or whether it's companies who are just decentralized and trying to run the business through a tokenized business model. So they're the investment arm.
Yeah.
So supporting that.
Yeah.
The second arm is what we kind of call blockchain infrastructure and advisory. So this is a kind of a services arm where you're trying to support these new computer networks. So a lot of these Web3 projects might be, they might require computers to be running certain things.
Yeah. Yeah.
So that's that part of that business. Advisory is also around, tokenization. So if there's, investors or institutions that need that service, we can help provide it.
Yeah.
And the third area, which is, I think, what you mentioned earlier, right, around virtual asset trading.
Yeah.
The third area of our business is exchange.
Okay.
So this Hashkey's focus, I think a lot, which is a little bit different from a lot of other participants out there. Our focus is that we believe that in order to really help support the growth, the mainstream growth of Web3 over the long run, not over the short term, like over the long run, is the industry needs, more responsible and more, more prudent financial market infrastructure around digital assets, around virtual assets, and around Web3, right? So our exchange in Hong Kong is licensed. It's the first like full license that we've got here in Hong Kong.
Yeah. Great. Thank you, Ben. Yeah. So I think you mentioned that it really unlock three values, right? One is the internet ownership. People wants to have ownership on their own digital virtual assets. Two, lowering the transaction cost, being more efficient. Particularly, I guess, for supply chain finance, because part of the issue is that the information asymmetric, right? But if all the information is on the chains and transparent, then it should be much easier. And the third is a kind of establishing new business model. The way I look at it is kind of changing the way how the social contract works in the society, right? So okay, great. Now. So far, you guys talk about a lot of good aspect of the Web3, whether it's being efficient, better customer experience, new ecosystem, right? Because you now have new players. It broadened the customer space, your partnership, right? So this is the 3E model I've been talking about. All this technology, digital, is to bring the efficiency, experience, and the change in a new ecosystem. But, as we always know, all technologies, all these new things always come with two sides, right? There's the other side, which tend to be more challenged. And how do we address those issues? And what I usually call the ethical issues, whether it being the security issues, the trust issues. So, I think we all have seen some of the issues happening in the market. Digital identity, reputations. These are some of the key elements in Web3. How do you think they will help establish the new way of the trust and authenticity in the digital community for the business? And do you think it's possible that these new forms of authentication can replace the existing process, especially for two of you in the doing AML, KYC in the traditional world? Do you think that's going to happen? Okay, so first of all, I guess Web3 will tend to replace that. But secondly, Web3 itself poses challenges, whether it's data security, whether it's identity, digital identity, and how do you think we should be addressing that? Maybe Jennifer, you go first.
Yeah. Probably, you know, I will answer, you know, in a reverse sequence.
Okay. Go.
I would like to talk about, you know, what are the, you know, the existing, authentication or the process we do.
Yeah.
Usually, I think you quite a lot of you are familiar with. The first layer is usually the password. Okay, we'll ask you for the password. You of course encourage you to have a strong password or PIN, you know, to authent yourself.
Yeah.
And then, you know, second layer is that, okay, some of the, you know, financial institutions, including like the wallet, we will have this, and also request by the regulator, we have this two-way, you know, a two-factor authentication. Yeah. So it's a very, actually just like send you a verification code and then via SMS or email, and then you just input that just to prove that you know who you are. Okay, and then the third one is, you know, biometric. Okay, say by fingerprint or by, you know, your face recognition. So I think this is quite pretty common, you know, layers adopted by a lot of you know,
authentication.
Either they may be like for and, you know, we actually adopt all free, and some maybe only choose to our free. You know, when we're talking about this digital identity, or, you know, the reputation, you know, I think we're talking some other thing, you know, because digital identity can be, you know, a username, a nickname. Okay, you can either a nickname, or you can use some, you know, say even your ID number or something to use that. And for reputation, it is even very broad. Okay, it based on, say, you know, my footprint, my online footprint. Okay, which site I visit, you know, who I follow, and then whether I give a like or dislike. All this thing is very different. So now, frankly speaking, I have a reservation whether, you know, this new authentication way can really replace the existing one, because it all depends on what kind of services we are talking about. You know, whether, you know, the level of security we are talking about, the sensitivity, and also what information. Say, for example, if you say like social media or some gaming services, probably if they are not talking about, you know, they need to have a very high security, you know, check, then probably I was saying about, okay, maybe I use a nickname, I can already, you know, enjoy the services. But if I'm talking about, you know, a lending services, investment, then, you know, we think about, you know, to protect my asset. Okay, do I feel comfortable just to use a nickname? I can use James, okay, as my nickname to use.
I have a good credit. Okay.
Yeah. So I think it because it's still at the very beginning. Okay, and then based on my limited knowledge, I think I will consider, you know, of course, in future,
the real name authentication.
That is, and also what we want to protect. Okay. That's very important. Yeah.
Interesting. Okay, so
if I can jump in, I think I would agree with Jennifer. You have the unregulated world, the regulated world, right?
Yeah.
So on the unregulated world, even I have some doubt, because all the pseudonymization can lead to not proving your identity, can lead to, you know, bad behaviors as well on the internet, like cyberbullying. So I think at some point regulator, you know, will come, you know, looking at that as well. And then the regulated world, for sure, I think, you know, we've seen it. Back in 2017, there were no KYC, no AML, and, you know, a lot of new crypto platforms coming on. And now, basically, all crypto platforms need to be licensed. The ones that are not licensed cannot operate, and they need to apply KYC, AML, whether they are in a B2C or B2B environment. So, you know, from the moment that regulator came, I think that was the end of the party, to be honest. So
do you support more open, unregulated?
Oh no, I think not at all, you know. I think I just want to say that in the regulated space, like finance, it's really important to have regulator, and that Web3 is not going to change a lot the way we do AML and KYC. It's just providing some ease, because, you know, we remove some of the we remove some of not controls, but I would say we simplify them thanks to blockchain,
so
and we automatize them.
You can use the technology to simplify and streamline the way how the current way of authenticating your identity, but you still believe there has to be a need to protect right? And on that. Okay, so it's not
Yeah,
completely
especially for their
unregulated.
investment, their investor, I know, I think
You
that
need
is,
to do your risk profiling questionnaire
exactly.
so that we can sell to you the right, investment. So
great. Okay, good. So maybe Ben, this is a good transition to you. As we talk about clearly, identity, authentication, a lot of them relates to the data, privacies, and data. You mentioned the data ownership, but it's not just the ownership, but you still have to exchange and the flow, right? Transfer, because the digital world we're living, the data is the key components and ingredients for AI, for computations, for all this. ChatGPT needs tons of data. We all need to contribute. We all need to share. And so there's a lot of flow, exchange, sharing, and some of them include the cross-border transfer of data. And that become more and more sensitive, whether it's just pure privacy issue or some even national security issue, and some might be just pure economic issues, right? So what do you think, how can this Web3 technology support and encrypt and secure the data transfer in what I call an affordable way? Because everything has solutions, but if you need 100 times of a cost and efforts trying to do, to do that, and it's just not worth it, right? So how company can transfer and store the data by utilizing cryptographic technology around privacy? Do you see Web3 can be a significant play from technology perspective or even business model perspective on that?
Yeah. No, I think that's a very, very fascinating topic, right? I almost think there could be a separate 1 hour session on that topic.
Sorry, we don't have
that much time. Sorry, guys. No, I think so I think maybe taking a step back, right? When people think about Web3, even going back to my previous answer, I think one thing that doesn't get discussed as much is the fundamental technology that's powering all of this, right? So whether it's identity, whether it's authentication, whether it's verification, at the end of the day, the fundamental base technology behind all of this is cryptography. Right? So, and that's how, if you look at Bitcoin or Ethereum or any of these technologies or other permissioned blockchains, at the end of the day, it's the usage of the cryptography math that's really protecting the data from being tampered, right?
I see.
So at the end of the day, I think, blockchain and data is actually very, very, very tightly connected concepts. So I think we've seen a lot of really interesting examples of, whether you call it Web3 and data, or whether you call it, blockchain and data, or whether you call it cryptography and data. We've seen a lot of really interesting examples out there, which I think happy to share here. And they're beneficial in different ways, right? So I think early on, a few years ago, we saw some examples of when you have sensitive data, let's say it's genetic data, right? Medical data, someone's DNA, things like that.
Yeah.
In general, in order to do drug discovery and a lot of different, a lot of different analysis of the data is someone requires an analytics firm would require that data in order to do computation on it, right? So you're trying to compute different algorithms. You're trying to compute, statistical algorithms on this. So you need the data.
Yeah.
There's been different applications we've seen where, the original holders of that data can provide their data in a private way and run computations on their own computers and share the results of those computations without having to share the raw data. Right?
Yeah.
So something else connected to that, which is also very interesting, is there's a concept, there's a lot of concepts going around zero knowledge proofs and something else called zero knowledge machine learning.
Yeah.
So these are ways where, whether it's Facebook, whether it's Instagram, whether it's Bilibili, whether it's whoever, all of these media platforms or any data platforms, in order to provide better service to users, they have to run calculations on the data. The challenge is, and this goes back to your part on data ownership, is if you want, as a user, if you want a service, if you want to use a platform with better services, it's actually advantageous to give your data up so that the platform can make things better.
Yes. Yeah.
Right? But then that creates a challenge, whereas once you give up your data, right? How are you making sure that they're using it in the appropriate way? So there's two solutions to that problem. One solution is kind of what you're seeing with GDPR and a lot of different data privacy regulations, which I think can be helpful. Another more of the technologist solution to that problem is, what if you allow users to run those computations themselves and then just deliver the results to the platform, right? So there's ways that there's something called like zero knowledge machine learning, where you can actually you can prove that you ran a computation and that you can verify that a computation ran accurately without providing the inputs. It's kind of like, some people call it, like math magic, and they call it kind of like space math. But there's a field of cryptography called zero knowledge proofs, which is really all designed around
it's kind of like multi-party computations.
That's one area of it.
Federated learning, something like that. Right?
Exactly. And I think the last thing to touch on is, besides using cryptography and math in a different way to run calculations yourselves and providing the results, there's also been other more Web3 business model ideas that we've seen out there, where users might be contributing, they might be willing to contribute their data to a third party, but the ownership of that data is actually controlled by the community. So there's this concept called data DAOs, which was raised by a company which was kind of being advocated for a protocol named Filecoin, and it's basically an idea that future AI algorithms and a lot of these large language models obviously are going to require a lot of data, right? Whether it's OpenAI, whether it's Claude, Anthropic, whoever. So the challenge becomes is, okay, if you're using these platforms and you continue to contribute mass amounts of your data, then you're enabling that centralized platform to become more and more stronger. The concept in something like data DAOs is everyone is willing to contribute their data to a database, but and you can run calculations, you can run algorithms on that, you can improve your model based on that data. But the ownership of that data can belong collectively to those who contribute into it.
So it's a data community.
Exactly.
It doesn't belong to it.
Right. So there's a lot of exciting stuff happening. I think when people think about Web3, there's a lot of these specific elements of it that are quite interesting.
Got it. So it's not just about being decentralized. People tend to think blockchain is just a decentralized ledger, but yes, there's a lot of encryption, a lot of, as you mentioned, about cryptograph, technology, or so-called secure computation is being involved over here, and to protect, kind of to balance, your ownership of data, but also how do we extract the value of the data in a more efficient way.
Yeah, privacy preserving.
Privacy preserved. Yeah. Okay. So yes, we talk quite a lot in terms of challenges and how we're going to address that. So maybe in this part, let's just look forward. As part of the, I guess, ecosystem, both Ant Group and Fidelity are already very active, I can see, embracing this Web3 technology. What else are you guys doing to make it even more successful? But also more importantly, what's your suggestion to the big ecosystem, such as regulators, think tanks, other market players? What would be your suggestions to them in terms of what they could do to collectively to make this even more successful in the future? Maybe Jennifer, you want to start first?
I start first. Actually, I think there are lots of things we can do together, but one very important driver or the driving force actually will be the policymaker.
Policymaker.
Yeah, I think
what's your advice to them? No regulation.
I would say we need to have a well-established regulatory framework with clarity.
Well established. Okay.
And then with clarity. Okay. Because you can think about because I think what Ben or Emma we talk about that now recently we have so many new services and then they have a lot of this new license and you just imagine in future, because I also quote example, you use this DeFi, okay? That means when we provide a service, it may be actually already, collaborate with several partners, and or even you are the own service provider, but maybe that's already fall into different license. So it seems that you know, the world now become much more complicated.
It is.
So we need to make sure, you know, we want to make sure we are regulatory compliant.
Okay.
But in that case, we need to have a very, as I say, very clear picture about, you know, what we need to comply, how to comply, because we also need to make sure we have a very cost efficient, you know, compliance framework. So I think this is very important, because on one hand we want to protect, you know, user. This is very important. But on the other hand, we also want to make sure, you know, the industry player can have more flexibility, more freedom, in order to run, you know, to introduce new services. And second thing is that I think there will be also you know, relate to the policy side, is that maybe need to have some blockchain or crypto friendly policies.
Friendly.
I understand. Because I think it's very important to have a friendly environment, because you think about, we talk about this ICO, initial coin offerings, STOs, but you know, it already talked about long time, but why, you know, we still find, you know, it doesn't grow a lot. I think it's because there's still a lot of policy which can further, you know, fine tune, improve. And second thing, you're talking about this collaboration. I think it's a very good idea. But of course, you know, if, say for example, we can, you know, have some innovation hubs, whether it's just, you know, Cyberport or Science Park, or you know, anything, you know, we can have some
think tank, research.
Think tank. We can have a place, you know, we can, you know, just you know, consolidate all this. I would say that the talents, the brains, you know, from different companies to think about, you know, how, you know, because by working together, because now nobody can do end to end. You need to collaborate together. And so probably will be the innovation hub will be a good, or you talk about think tank, you know, to be a good place, you know, that we can. You know, to go together and then to create or to have some innovative idea to build something which is very unique and you know, for, you know, as compared to others. So I think there are actually quite a lot, but I would like to, you know, let my fellow panelists also to, you know, contribute.
A lot of advices to the policymakers.
I think in the future for us, we want as well to be part of the ecosystem, and the challenge in the financial market ecosystem is that all the banks at the moment are trying to operate each of them in private blockchains. And as an asset manager, as we want to participate in token assets, basically we need to then operate with all of those different networks. So there is, you know, the real question of interoperability that is really there. And how we can, you know, bring all that ecosystem together with the same standard, so that when we start embarking basically new assets in our portfolios, it's not too much trouble, basically. So that's the first one. Then the second as well is, you know, the regulation. I think I agree on the clarity, but as well on the make it more inclusive at the same time, so that we can basically start on some areas of the market, experimenting and see whether Web3 is worth, you know, I mean, using, I would say, so that we can do more experiments. And I think on this area, Hong Kong is really like forward-looking. And yes, so that would be the two areas.
So first of all, to the advisors to the ecosystem, you know, this is Web3 is supposed to be more open, more many to many, and we need to have more, you know, interoperability, right? Not just building your own kind of territories. And to the policymakers, in addition to clarity, but also being more inclusive, which I, you know, agree wholeheartedly, because, you know, every technology advancement seems to be creating more gaps, you know, for the underprivileged, you know, underserved market. Especially with this, you know, complicated technology, would that become, you know, exclusive to the other people, right?
Sorry, I just want to be precise, because when I say like trying in some area, is because at the forefront of blockchain, you have fractionalization. and you want to bring, you know, those assets to the masses. But at the end, when you look at STO regulation at the moment, they are mostly for private investor, private wealth investor, accredited investor. So, you know, we are not benefiting all the benefit of blockchain in that case, right? That's why I just wanted to clarify. Thank you.
Yes, agreed, totally. Okay. Ben, I guess last question to you. I want to kind of change it direction a little bit. Link it to more the real world. You know, we talk about RWA, real world assets. I guess one of the biggest challenge right now we're facing is the climate, right? This year especially, you see how you know, the disasters all around the world. We have the hottest month in July, and then you got a flooding, typhoon. You know, Hong Kong's getting black or red rains. I can't even figure it out. Clearly, carbon emission, carbon trading become a global issue, and how we could leverage it. Because I've been thinking about this actually, because that will be a perfect scenario to apply. Because, you know, carbon emission, carbon reduction, that behavior could be happening everywhere. It requires a lot of data. Right now, the issue, well, first of all, the standard, agree on the policy, on the standard. Secondly is, you know, how you measure the data, right? And there will be, you know, this is something is a global issue, okay? And we need a more efficient way of capturing and executing this. Can you share some, in your views, how this platform or the new technology can support the trading of that?
Yeah, sure. So I think, I guess for background, right? Our company, Hashkey, and also myself, we were, I was the advisor on like kind of the first generation of a project in Hong Kong called Project Genesis, where it was a collaboration between HKMA and BIS and a number of different industry participants to explore how you would use blockchain and IoT technologies to tokenize green bonds. Right?
Green bonds.
So we're talking about green finance and also green infrastructure, right? The monitoring of green infrastructure. So I can talk about that in a moment. I think to your specific question, right? There's a few other examples from Web3 which I think are quite interesting. A few companies we've helped support. So we've seen one company, I believe the name of this company is called Arcreen. We've seen one company try to use, you know, Web3 business models, Web3 technology to create what's called a decentralized physical infrastructure network for renewable energy. Right? And it's called DEPIN. DEPIN is the name of that type of industry sector. Long story short, like the whole industry chain here is as follows, right? You have solar energy producers, right? These aren't like your big companies that are, you know, that are going out and spending, you know, hundreds of $millions on a solar plant, but you know, it's basically, you know, companies who have roofs, it's families who have roofs, it's a lot of different individuals.
Decentralized.
Very decentralized, and you know, you can, a lot of these folks can create, you know, can buy solar panels and generate that energy. The question is how does that action get recorded and get incentivized and recognized, right? So in this particular example, what you can do is you can, this company created IoT hardware that's connected to the internet. So it's basically just a little piece of hardware. You connect it to, you know, you connect it to the solar panels, and every time you are generating, so it has a like an electricity, like a current meter attached to it. Every time you're generating electricity, it is able to recognize that and put that record on the blockchain. And at the same time create something called a renewable energy certificate, right? These are called RECs. And those are tokenized, right? So this is a digital asset that gets created, right? And the provenance of that digital asset is connected directly to that moment in time where the renewable energy was produced, right? So the benefit of this, so that's the production side, right? The production side of proof of renewable energy, right? The buyers, like the buyer side of that is generally like large corporations who, you know, if for example, let's say for example, you use your large corporation, say, I don't know, McDonald's, right? And you use this amount of electricity in 1 year. If you want to, you know, prove or you know, if you want to prove that if you want to try to make sure that you have generated all of your electricity from renewable sources, a lot of those companies might go out and buy RECs, right? So for example, I think it's public. I think Apple has gone out and bought some, Microsoft, and these big tech companies go out and buy them to like offset the data center expenses, right? So in that specific example, what you're tokenizing, the real world asset that you're tokenizing, is not necessarily a financial asset or a financial instrument, but it is a recognition of some type of environmental impact that you've made, right? So that's pretty interesting, and that has value, and then it gets bought and sold.
That's what we call the externality. Okay, and the issues in the past, this impact tend to be, the harms being socialized, the benefits being privatized. So the way how you internalize the externality, it's critical, and that's why I think this technology is going to be in the future play important role to support that kind of new asset class or new behaviors. Okay, conscious of time, I just want to see if there's any questions from the audience. Okay, there's a couple of them here, and I think I'm gonna kind of summarize them into, I think it's just one because we don't really have much time left. So it talks about accessibility of great financial inclusion, economic empowerment, and also asking about potential to disrupt traditional financial system. How does that change the financial world? And we talk about security and a private issue. So maybe focus more on this, the one question in relates to how Web3 is going to improve financial inclusion, and how's that disrupting the traditional financial system. I know you kind of already mentioned some of them. Maybe if there's additional comments, very quickly, I guess 1 minute each to address.
Yeah, I can just chip in, and maybe
you
can add. Yeah, definitely in the fund tokenization space, the advantage, as I mentioned, is fractionalization, so that you can start distributing fund in emerging markets, for example, and develop micro saving solution. So really, Web3 and blockchain enable that, and because we are able to save a lot of operational costs by tokenizing the fund, we could be able to offer micro-saving solution that bring greater financial inclusion.
Okay, lower the boundary, threshold, minimum for the investor.
And as I mentioned, in the experience that we have developed in Decentraland, what we wanted to show is the power of small amounts. That you don't need to save tons of money, but as long as you save a little bit every month and you get that saving habit, that then you invest, you don't keep that into cash, you invest, then that's where you start to build a broader wealth and good investment habit.
Yeah, so really help the minorities to invest. Anything, Jennifer?
I talk about actually for Web3, we always talk about this. They introduce this concept of permissionless.
Permission.
Now, so because I think earlier we didn't touch much on this. Because when you talk about permissionless, that's in the extreme case. That means no need to have a platform there. Okay.
Right.
Okay, James.
That's going to disrupt you. Okay. You're a big platform.
Not only. I think then I can I can directly deal with individual to individual or B2C.
Yes.
So this can be I think quite a big disruption.
Yes, it is.
But there's also, because when we're talking about this, that means that will also introduce a lot of new cyber security issues.
Yes.
Yeah, because these are not like a platform. We can make sure that we follow all those license requirements, regulations, and also make sure we have this EKYC everything. So with that may actually bring in a risk to the user or to the company. So this is on one hand that may have I would say opportunities, market opportunities, but you also have a lot of risks you need to mitigate.
How you balance it?
Yeah, how you balance it? Yeah.
Ben, quickly.
No, I think the space is evolving very, very quickly. Right, a lot of things are happening. I think and to be honest, I think a lot of regulators around the world, including in Hong Kong, are doing what they can to to keep up. Right, and I think as we look to the future, probably the most some of the most interesting things that we see are again, how do you make more stable, reliable financial market infrastructure for the space, right?
Yeah.
That protects token holders, protects digital asset holders. Because at the end of the day, behind a lot of these different business models is you have digital assets that are being created, right? They're either being tokenized, and those need to be custodied. They need to be held. They need to be traded, and if you don't have the right protections in place, I think the risk in one counterparty can be contagion to the entire to the entire industry, right? So I think what's exciting to us is kind of seeing how over time these trading venues and the way in which you issue these assets become more and more reliable, standardized. And I think what you've seen over the over the past 2 or 3 years is originally a lot of jurisdictions were just trying to manage the AML and KYC risks. But Hong Kong, I think, had done a good job because from day one, the SFC came out and said, okay, in addition to managing those risks, we're also going to manage kind of the prudent financial risks, right? Which is make sure that that the trading venue has enough capital, that they have, custody is ensured, that there's segregation of assets, that there's client disclosures and all these different things, right? And I think you're starting to see more and more jurisdictions across the world go in that direction, right? Singapore originally came out early and was focused on payments and AML, and now in the recent consultations, they're kind of bolting on additional things. And then Europe is also going the similar direction.
So focus on the substance of the risk, which whether you do it virtually or in the real world, they are technically similar. But you got to allow the innovations on the forms to take place. Okay, now I'm conscious of time. I just want to wrap up here. We all know Web3 is coming fast, and it really changes the way how we govern and oversight. And over the next few years, I think we're going to expect every company's online presence to become heavily dependent on the digital ownership and the transactions for everything from whether it's one digital identity, virtual real estate, to supply chain and a social network. All of them is going to be affected. There's definitely a need for all of us to rethink and rewire the brands and the relationships. And since today we are all financial services company, and it's also probably the time to really step outside. I guess it's not just the FS, but everyone step outside the comfort zone and revolutionize business model and really engage the digital community and embrace that. Thank you everyone for joining us today. I hope we have contributed to your understanding and interest in the Web3 landscape. Replay of this webinar will be also available on the linking page of the AFF. The Asian Financial Forum AFF on 25th of January 2024 will delve deeper into the various issues at hand, and we certainly hope to see you there. For now, please stay on and for a short, quick video to recap what we have discussed and showcased in the last year's AFF. Thank you.
Whole world's people are facing daunting challenges, including climate and sustainable development and other global UN goals. I need the global solutions in addressing global challenges. That's the main reason why I am here attending the Asian Financial Forum.
I think if we look at it in the business and company sense, a woman leader will have a particular ear out to what the women consumers and clients actually want. They showed empathy with their communities. They followed the science.
And science has told us very clearly that by the end of this decade, by the end of 2030, we have to be at 1/2 global emissions if we want to stand any chance of having a stable economy and a stable planet after 2030.
I think a lot of the pundit has not shared or count that when the North Asia, especially China, Hong Kong, things will actually also help a lot in the world recovery. This conference in particular and Hong Kong in general can play a huge role in centralizing the trade and the investment across, not just in North Asia, but also all Asia.
Hong Kong is strategically positioned in the finance and commerce in the entire region of Asia. And Asia is undoubtedly strategically positioned in global commerce and manufacturing. So Hong Kong and this forum should be the clarion call for decarbonization in the region.
Open new possibilities, all of that is positive.